Well, Stephen Wieting is managing director at Citigroup. He's expecting some upward surprises. He joins us now. Sounds a little cautious, but we just came off of the best week in what's otherwise a down year.
Yes.
Are expectations low enough at this point that we are going to see more upward surprises than downward?
Well, it's helped. I think that market-based expectations for the outlook, especially beyond the quarter, have been reduced considerably. I don't think markets are pricing in another full-blown collapse in activity, and that's unlikely. But analysts raised their estimates in 13 of the past 14 months. So we're not at the point now where you're going to see monstrously large earnings beats and tons of higher guidance for the coming quarters when the estimates are already there.
So it sounds like in some ways you're saying we've already experienced the best of what's out there.
Oh, a lot has happened. We've had a snapback in a lot of industries. There are small, narrow industry categories that have doubled their output over the past year. I don't think it's got to a troubling level where everything simply collapses again because of too much prosperity, and it's nothing like that. But we've had a good snapback, and that phase is over with.
But you do say here in your most recent note that the earnings season alone is unlikely to provide a negative catalyst for the markets.
I think so. I think that most companies will beat their quarter past earnings sum. The quarter ended on a soft note. And I think that that may limit upward guidance for the period going forward, particularly in the face of estimates that are already higher. But it's not as if earnings are not growing in an absolute sense. I think that they will continue to grow in an absolute way.
Now, you hit at more of a philosophical approach here in your writings. You're talking about what you see as sort of a change in consciousness about this raising of rates on the tax front in 2011 that's to come. How are you seeing that affect behavior right now?
Well, it should affect consumption spending to some extent when you consider that there's a wide range of possibilities on tax rates in the coming year.
So what does that mean? You avoid a dividend-paying stocks, or you look to treat your capital gains differently this year?
Well,
before 2011?
Yes, it could be a concern. And I mean, you are seeing some companies raise dividends into the face of a potential tripling in dividend tax rates. Now, again, hopefully that's the unlikely scenario, and you've heard comments to the contrary, but it does take an act of Congress to stop that from happening. And you have to at least have some probability of a worst-case scenario, if that's your concern, that dividend taxes will be much higher in the coming year and forever after.
But you're not actually pricing in for the expectation that Congress will extend these Bush-era tax cuts?
We're not expecting a full reversion back to ordinary income tax rates in our outlook. But if we did, it would be a pretty considerable effect on the present value of markets. We have some increases in line with the administration's views in taxes there. And either way, we have an expectation in our forecast for a fiscal tightening of 1% of GDP. And it could be worse.
Before we leave, what's the area, the sector that you're most interested in terms of providing guidance of what's to come?
Well, companies further out in the value chain beyond just commodity producers, where we're seeing a slowing rate of change in commodity prices. Industrial companies that use commodities, technology companies that use commodities. The more complex they are, the further out they are, the more it really corresponds to real economic growth, not just price change.
So Alcoa is not going to tell us the whole story today?
Can't comment on that. Okay.
But in other words, that's what you're saying. It's not just the companies that produce the commodities, it's those who are consuming them.
Yes.
And financials, I mean, how much of a bellwether are they going to be?
It's really important. And again, there can be complexities about the quarter past that tell us nothing. But financial profits lead non-financial profits. No way around it. You have seen downturns in financial profits. It can take as much as 2 years before the non-financial companies reflect that in the real economy.
All right. Well, we will watch. We begin today after the bell. Thank you very much, Stephen, for coming in and telling us what you're expecting.